Gold closing at an all-time high as the dollar keeps dropping. Rising oil prices and concern over whether or not the oil states will dump the dollar in favor of another currency. We have a panel of oil all-stars ready, or maybe they're oil stars. Sharon Epperson, Rick Santelli, David Morgan, publisher of the Morgan Report. Sharon, let's begin with you and the headlines of the day. What's going on in the oil pits?
Well, let's start with gold because that is the biggest story in the commodities complex today. And again, the inflation-adjusted high for gold was back in 1980, over $2,300. But today, we hit a nominal record and closed at a nominal record today. The intraday high, $10.45, and the closing high near $1,040 an ounce. And what happened? It was a double whammy hit to the dollar. You had the Australian rate hike as well as that report in the independent newspaper in London talking about the Arab states having these secret talks to consider moving away from the dollar to another basket of currencies for oil sales. Now, the impact there of the weaker dollar did have an impact across the board in the commodities complex, not only for gold, but also for oil. Oil prices hit $71 a barrel plus. They're off of those highs right now as the dollar has come off of its lows. But gold continues at this record range that we're in. This new range now is above $1,030 an ounce.
All right, stand by, Sharon. Rick, what's going on? The greenback is a has-been?
Well, it's certainly not acting like it's an up-and-comer, that's for sure. You know, listen, if you were locked in a room and all you saw was T-bill rates, you know, look at a one-week chart of a one-month bill. It's now under 5, under 4, trading 3 to 4 basis points. A 3-month bill's only trading 7 basis points. We had a good auction, but rates aren't going up. Look at the 3-year, a little elevated, but $39 billion out the door. And the last chart is the antagonist of this really nasty scenario where the dollar is just getting dumped on in oh so many ways, but yet the logic of that story referred to by Mr. Robert Fisk in The Independent is hard to refute. Mark Haynes, if you were holding nothing but dollars, would you have a few secret meetings? Back to you.
Oh, yeah, lots of them.
That's right.
David, time for you to chime in here. Is gold the choice right now?
Absolutely, gold is the choice. There hasn't ever been any time in recorded history where a fiat money system hasn't had these kind of problems, and now it's coming to the fore. China is in the mainstream press talking about a replacement for the dollar. So now that we have this article breaking in the United Kingdom on The Independent, Mr. Fisk, we know that there are a lot of concern throughout the global empire as far as what's going to happen to the U.S. dollar.
Help me out here. The inflation-adjusted high for gold was over $2,000 almost 30 years ago. How is gold an inflation hedge when it's lost, compared to inflation, half its value in 30 years?
Give that man a Cupid doll for that question.
Well, thanks, Rick. Yeah. If you go back and look at the high of $850 per ounce in January 21st, 1980, you had a cover ratio of 2 to 1. In other words, on the M1 money supply, the currency in circulation, if it was fully backed by gold, it would be $400 the ounce. We all know from history that it got over double that, $850. So right now, I think we're in the early stages where more and more of the population globally is waking up to the fact that the dollar is not worth the paper it's printed on, and there is another asset class, the precious metals, that serve very well during these type of crises.
Well, maybe short-term in a crisis, but you really kind of evaded my question here. I mean, it's lost half its value in 30 years.
Well, Mark, I'll try to touch it.
Rick, go ahead.
Well, I think gold, at one time, before there were options on treasuries, before there were over-the-counter products, it was a staple of trading, and it did reflect economic fundamentals. I think at this point, it's just a trade that, and I don't mean this in a disparaging way, it's a retail trade. They like to own gold, they're afraid of the weak dollar, but are they really getting their money's worth? The protection's the question, and do they know that they're not trading an economic fundamental? All, I think, important questions.
And I think right now, Rick, aren't a lot of folks holding gold just to protect the value of their money? They're not looking to necessarily make an investment here and expect it to rise as it has in the last couple of months, but they're looking to just protect the value of the money that they have right now. Don't know if that's the right move right now, but I think that's what a lot of investors are thinking about.
Yeah, and, you know, I mean, and this idea that it's a safe haven in a crisis we've been through a lot of crises in the last 30 years, and it's still lost half its value. Let's get John Kilduff in here of MF Global. John, what about the oil situation? Where's this headed?
Clearly, market's headed higher. It's become a store of value, much the same way gold has. I mean, in deference to Rick, I have to say, I'm not sure investors or consumers or any of us have ever in our lifetimes faced the kind of printing press that we're looking at right now. This is a wave of hyperinflation that we're potentially looking at if this thing doesn't come back online quicker than we can even hope for. So,
all right. You know what, John?
You have that in geopolitics, market's off to the races for us.
John, I do not argue that printing press. I agree with you and David on that printing press argument, but I don't see the evidence that these commodities are the answer. What's gold's all-time, or I beg your pardon, oil's all-time high?
Well, the $147 a barrel that we saw last year, and that was when everything was, you know, we didn't have half the economic situation that we were in then.
And now we're at half that, 1 year later.
We're at half that.
Doesn't sound like a good place to hide in a crisis.
I'm sorry, Mark, say that again?
I say if we're now at half the high 1 year later, oil doesn't sound like a good place to hide in a crisis.
Well, I think it most certainly is, particularly if you
It's lost half its value.
It's lost half its value, but that was because we were in that perfect storm. We were up on 147, Mark, because the economy was thought to be on fire at the time. Right. GDP of 5%, insatiable China demand, and the rug got pulled out from under us all.
All right. I wish
Mark,
we had more time.
with all due respect, if I could chime in here.
Very quickly, David, very quickly. We are out of time.
I could use your argument and reverse it on you and say you're making a very strong case that gold is undervalued, and I believe it is. I believe it's going to go past the nominal high, the inflation-adjusted high. I'm looking for $2,500 the ounce minimum on gold eventually. Doesn't mean today, doesn't mean today's crisis is going to get it there, but it will get there.
Okay. Sharon, Rick, John, David, thank you all very much for your input here.